going to suspect this. We think the advance in silver, which again wobbled today, continues. You take out the recent high, for example, at 35. Yet again, we do that. We make a high and, oh, goodbye, and it's not goodbye. You take it out later. We're at that threshold where if you get that silver gold spread up to that 1.3%, which to us is a neon sign saying, I'm going to accelerate, I think silver's going to take out its dual highs at 50 and do it in a flash. And once you do that, suddenly the public then wakes up, who've not been paying attention to silver. Their buddy has, their next door neighbor has, and he's been telling them stories and they didn't do it. And all of a sudden they have a sense of uncertainty. That's when silver gushes.
The manipulation of gold and silver markets has been a contentious issue for years, with numerous analysts and insiders contending that large financial institutions and central banks actively suppress the prices of these precious metals. Experts point to significant evidence that suggests entities like the Federal Reserve and other central banks engage in efforts to manipulate gold prices, primarily to benefit major stakeholders and align with broader investment strategies. These actions are believed to be driven by a desire to maintain control over inflation expectations and reinforce the perceived stability of fiat currencies, discouraging the public from investing in gold and silver, which have long served as reliable safe haven assets during periods of economic uncertainty. In an interview with Commodity Culture, market analyst Michael Oliver discusses how manipulation in gold and silver markets often occurs during low-volume trading hours, making it easier to influence prices without significant opposition. Sharp price drops in early trading sessions, for example, appear to be deliberate attempts to create a perception of weakness in these assets. However, despite such attempts at price suppression, gold and silver have seen substantial gains over time, with significant year-to-date increases. This resilience suggests that while short-term price control may be possible, sustained demand for hard assets, driven by inflation concerns and economic instability, exerts upward pressure that manipulation efforts cannot entirely counteract. Oliver notes that these suppressive tactics might ultimately backfire by creating a spring-loaded effect, wherein pent-up demand is eventually unleashed in a rapid price surge once manipulative barriers are removed. Such potential for explosive price movement has attracted long-term investors who view gold and silver as safeguards against monetary devaluation and economic uncertainty. Oliver predicts that as public awareness grows and more individuals recognize the value of precious metals as stores of wealth, demand for physical gold and silver could significantly outstrip supply, potentially driving prices to new highs. We present the clips of Michael Oliver's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I can't deny that it's occurring, and we know in the past it's occurred. You go back to the 79 bull market in gold, the IMF was dumping gold by the tons, okay? Sale after sale after sale, dumping gold. And it initially in 79, as I recall it, I was in the futures markets then, there were sharp drops when the IMF would dump. But there was a point at which they would dump and it wouldn't drop at all. It would go up. Okay, so there's a point at which reality can't be distorted even by the superstate. Okay, they think they can, and yes, they do temporarily. And my son Brett has noticed that when you look at the hourly action of the S&P, of the silver and the gold markets, you look at this morning, for example. When do they beat it up? It's always in the dark as you're about to go to daylight. Early in the morning when they open the futures market, they've already dumped on the market during the night when trading is less volume. And you get these huge down hourly bars. But it always occurs like in the dark, when they can manipulate easily. Ultimately, that's going to backfire. And also stand back and look at it. I've got some charts showing year-to-date performance of the markets. And you see the S&P and the NASDAQ up, 10, 15%, pushing on 20. They're backing off right now. They were near their highs. It wouldn't shock me at the end of the year. They're down on the year. But silver's up 35%, gold's up about 33% on the year to date. Okay, so despite the manipulation, which you can probably see in daily action, maybe today, for example, look at the gains they've made. So really, it's not working. If it were, gold wouldn't be up 30+% this year. Silver up 35. So Ultimately, there's a point at which that manipulation doesn't work at all, and market just blows through them. And ultimately, the manipulation likely compresses the volatility that later is unleashed. Where if reality is distorted and you've kept reality from emerging, when it finally does emerge, it's more volcanic than it would have been if you'd let it alone. Okay. So actually, it's probably bullish for gold and silver investors that the central banks think they can play that game.
Small portion of my paycheck and buy a few silver coins now and then to protect my purchasing power and to kind of store wealth outside the traditional financial system.
I think that stock market break, despite what the popular wisdom is among most investors. You break the stock market, gold and silver go down. That is simply not true historically. 2000 to 2002 bear market, the stock market, gold went up nicely, so did silver. 2007 to 2009, with the exception of 1 month in October of 2009, gold and silver went up sharply. When the stock market collapsed in October 2008, everybody said, oh my God, I sold gold too. Well, gold was ripe for a technical correction, even by our metrics then. It corrected quickly, and within about 4 or 5 months, it was back to its high. S&P kept going down through March of the next year, and it took it a year or two to get back to its high. So everybody's fixated on those momentary times where they could find 4 weeks here or there where gold went down with the stock market. They don't see the bigger picture. And frankly, this time it's different. If you generate that fear and you hurt people, literally hurt them, with the retirement accounts dropping 20%, 30%, and you give them a sense of fear on both ends, the cost of living and their savings are gone. I'm already getting emails from quite a few people saying, I'm moving from cash savings over to bullion savings. And, I think that's already going on. And when you crack that stock market and create the negative sentiment and the emotion that goes with it, people will seek something that's going up, even if they don't quite understand why. Their buddy did it and it's working. They're going to move money into bullion savings where they feel comfy, that they know that their savings aren't going to deplete in buying power. But I think the stock market actually is a positive factor for that, not a negative. We shall see. But I think that factor is about to come into play, and probably rapidly.
Silver prices have experienced an impressive surge this year, sparking curiosity about how high they might go in the coming months. A critical factor influencing this rise is the persistent supply and demand imbalance, with demand consistently surpassing supply. According to the World Silver Survey, 2024 marks the 5th consecutive year of a silver shortage. In 2023, demand outpaced supply by over 142 million ounces, resulting in a significant deficit. By the end of 2024, this shortfall is anticipated to nearly double to 265 million ounces, fueled by surging industrial demand. Historically, silver's demand has split equally between industrial use and investment, but recently, industrial applications have expanded sharply. Now making up 64% of global silver demand, a 19% increase from last year, industrial demand is driving the market, particularly in sectors like renewable energy, where silver is essential in photovoltaic cells for solar power generation. As public awareness of silver's practical applications grows, investment demand will likely also increase, especially if economic or political uncertainties heighten. Rising commodity prices, market volatility, and concerns over retirement savings could prompt more investors to turn to hard assets like silver for stability. Michael Oliver asserts that silver may set new record highs if these trends persist, drawing significant interest from institutional and retail investors.
The industrial demand based on that is rising dramatically, double-digit percents every year, whereas silver production is flat at best and really declining slightly annually, year over year. And from what I understand also, China has really come into the Central American silver production and monopolized it. And I even understand that they've been paying prices for raw silver ore that's equivalent to purified silver. They're really strongly demanding it. And it's not for monetary issues. It literally is. They're 80 to 90% of the production of solar panels, voltaic cells. So I think it is really a thing that will spring on the public. You and I know about it because we're in touch with the industry. But I don't think the average Joe on the street is aware of that. And it's one of those kind of things that could help separate silver from gold, because gold is monetary solely, and silver has this industrial aspect. And to the extent that uncertainty hits the world, and we think that's coming. Stock market drop will facilitate that in some ways. Also, jeopardy of bond markets will facilitate that in some ways. A sense of nervousness. I need to protect myself. Even here in the U.S., where families, like in Texas, they're tired of the repeated hurricanes knocking power out for 2-3 weeks. So demand for solar cells, even in the U.S., is strong. I think the political instability we're about to see is something we predicted about a year ago. We can get on that later. Provokes emotion. And when stock market starts to break, that will really provoke emotion. Not just economic pain as rising commodity prices have done, but if suddenly you take 20% off everybody's retirement account or 30% off, they're getting hurt badly. They're bleeding from both ends. And that generates emotion. When you generate emotion, you generate factors that we don't normally incorporate into market analysis. You generate dynamics, downside for the stock market, and a movement toward things that make you feel comfortable. In the case of monetary, where you want to put your cash, what kind of cash do you want to keep it in? Bullion or paper that's evaporating in value? In terms of your sense of confidence that you have electric power tomorrow, on a sense of instability. What the heck? $3,000, you can buy a generator that's solar powered that can generate most of your appliances. So even in the US, that demand could be sparked. But I think it's real. I think it's a real factor. And yes, it's been hyped within the industry and analysts like you and I. But the average public that's not a factor in their mind. And if all of a sudden you hit them with that gives them an extra excuse to favor silver over gold. And I'm going to suspect this. We think the advance in silver, which again wobbled today, continues. You take out the recent high, for example, at 35. Yet again, we do that. We make a high and goodbye, and it's not goodbye. You take it out later. We're at that threshold where if you get that silver gold spread up to that 1.3%, which to us is a neon sign saying, I'm going to accelerate. I think silver's going to take out its dual highs at 50 and do it in a flash. And once you do that, suddenly the public then wakes up, who've not been paying attention to silver. Their buddy has, their next door neighbor has, and he's been telling them stories and they didn't do it. And all of a sudden they have a sense of uncertainty. That's when silver gushes. And all of a sudden, I bet at that point in time, that's when those type of headlines about the industrial demand for silver hit the fore.
Silver market manipulation has long been a contentious issue, with major financial institutions allegedly involved in efforts to control prices and curb silver's appeal as a stable asset. However, if silver prices were to hit $50 or higher, it could signify that growing demand surpasses these manipulation efforts' impact. Such a price surge would likely attract increased interest from institutional and retail investors, especially amid ongoing economic uncertainties. The rising industrial demand for silver, particularly in sectors like renewable energy and electronics, is expected to continue driving this demand, further straining an already limited supply. Please share your thoughts on Michael's analysis in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.